Welcome back to the show, everyone. This is Bill Murphy, your host of the Red Zone podcast. Today, I am recording from central Pennsylvania. I'm actually at my alma mater, Penn State. I'm in a mansion that was from the early 1800s. It actually used to be a fraternity house, actually my fraternity house. So this is a big 20,000 foot, just gorgeous stone building that is no longer a fraternity house. And I'm in the drawing room, and you can see the stained glass windows behind me. It's quite gorgeous steam heat that you can hear kind of rumbling throughout the whole building. So it's really well kept. And this is a good place that I've chosen to get some work done, focus on some business projects, and record a podcast. So, we have a special guest for today, and I want to give you a little bit of a background. And so I want you to ask yourself a couple questions as you listen to this. And you can see the title. The title is A Glimpse into the World of a CIO and Successful VC Investor. Now, why would I pull this kind of person on? Because we never had someone like this. I love CIOs that are achieving things that are not ordinary and are interesting. And it'll give you a glimpse into potentially what you can do with your own career. So these are the questions. What if you could be a CIO or a CTO? And we make that distinction in this conversation, but also have a vested interest in the growth of the business you work for. What I mean by vested is some compensation plan beyond your salary, options, et cetera. What if you were able, the other question is, if you were able to evaluate the capabilities of an entrepreneur and his team to achieve and succeed in an environment where most fail? So looking at entrepreneurs and evaluating, is this woman going to make it? In a world where 90% fail, is the team good enough to make it? So most CIOs are looking at your infrastructure and your capabilities and people within the organization. But what if also you were doing evaluating entrepreneurs and their ability to win? What if you could use your technology knowledge and know-how to improve your own financial life? How would you do this? Who is doing this? And are there models out there? So today, my guest is John Arsneault, just like the soccer team over in England, Arsenal, and who is a technology management executive, a venture capital investor, and a startup advisor, and CIO with over 30 years in the tech industry. His expertise is in strategy, execution in the realm of growing businesses. And his expertise goes from tech startups to legal services, academia, financial services, consulting. And he's led efforts across startups, mid-sized and large organizations. As I mentioned, he's the CIO for a law firm out of Boston. And he's responsible for, as you might imagine, all the infrastructure, the application portfolio, security, cloud, et cetera. And he's also the founder of Portfolio X. It's a VC firm, venture capital firm that invests in emerging technologies, some of them that you'll recognize, like Lyft and Pinterest and DocuSign, MongoDB, DraftKings, SpaceX, Cloudera, Nutanix, DigitalOcean, and others. And we talk about this, and I think you'll find this very fascinating. He's also in the board of advisors, the advisory boards. And this is something for all of you to think about. Why can't I be on an advisory board? What is an advisory board? How is that different than a board? So some of the boards he's involved in are Net Capital, which is a startup investment platform, a legal tech fund, a venture capital firm focused on legal technology, Intap, a business systems company focused on legal and financial service, and Priva. You'll be able to see his LinkedIn profile. He's very active on LinkedIn. And so you can see what he writes for. He writes for Wall Street Journal's CIO network and has a lot of great opinions about where the trajectory of innovation and technology is going. So we have just a very fascinating, wide-ranging conversation. And I think you're really going to enjoy my conversation with John Arsneault. Enjoy. John, I want to welcome you to the show today.
Thanks for having me, Bill. Good to talk to you.
So for everybody listening, I'm going to let John. You've heard a little pre-intro that I've recorded earlier, but I think it's really, really important to. I try to bring on interesting CIOs that are doing some really, I think, innovative, interesting things, and within their businesses, but also externally. And you and I had connected earlier about this, and maybe we can talk about your trajectory as a CIO and some of like, did you always know that you wanted to run the IT organization for business, like all the way back in high school and college?
No, definitely not. So I got my start in IT my senior year in high school with an after school job. And it was sort of just a collection of circumstances. But my original plan was to, work at this job for 3 or 4 months and make some money, and then in the spring play baseball. And it turned out that they hired me to do some office services related work, and they grossly overestimated how much work it was. And so I'd finish up within an hour and had 3 hours to go. And so eventually they paired me up with a PC tech and asked me if I wanted to learn how to repair PCs. And I said, sure. I honestly had no idea what a PC was at the time. So this is 1988. And that's how it all got started. I never ended up playing baseball, went on with that company full time, and have been in the tech industry ever since. But there was no grand plan, that's for sure.
Were you a good baseball player? Like, were you trying to play semi pro, or just this was like more of a high school hobby, or not hobby, but a high school sport you did?
Well, in my own head, I was convinced I'd be playing for the Red Sox one day. That wasn't really all that realistic. I think I could have played in college, but ended up foregoing athletics, basically to pursue the technology career.
I went to BC High right in Boston, and we used to jump on the tee on the train to get into Fenway Park, for opening day. And there's something about that park. There's something about it. I mean, of course, I have a narrow perspective because I've only been to Baltimore Stadium and maybe Yankees and Boston, but it does have it's a really interesting park, isn't it?
I think so. So I've actually had the good fortune to be to most of the parks. And, one of the things I do every year is I'll go to 1 or 2 parks just if I'm on a business trip, or I'll go with a friend. And, this is probably hometown bias, but I think there's nothing quite like Fenway. Wrigley's pretty close. Wrigley's a pretty cool experience. The park itself, I don't think is as cool as Fenway, but they may have us beat with all the Irish bars on the outside.
Interesting. There was a special I was watching last week of it's called The Most Interesting Backyards, and there's a guy in Maine that has put together 3 replica stadiums. They're life-size replicas of Fenway, Wrigley, and I forget the other one. It might be Three Rivers. I forget it exactly, but three store parks, and they're miniaturized to the sense that basically they play wiffle ball. They basically play wiffle ball on these parks, but there's huge walls, there's digital signage, and it's basically like the wiffle ball tournament of the United States is there. I mean, it is, and this guy's
cool.
passion is baseball. It's a super cool thing. You probably Google it. And it's in some town. I think it's it's in some part of Maine, like mid-Maine somewhere.
That's very cool.
Very interesting. So baseball, and then as far as the technology trajectory, did you say you went to college and studied it, or did you just continue working from 1988 just and staying within that path? Like, did you go deeper into like computer science or any other disciplines like that?
Yeah, no. So it's an interesting question. So my original plan was I was working for Wellington Management. That was the company that I started with when I was in high school, and they had made a deal with me that I would go to college. I was going to go to Northeastern, and I would do that during the day, and I'd work in their computer room second shift at night. So I'd maintain my employment there. And so I did that for 3 weeks. And in those 3 weeks, all the learning that I was doing by being around other people had completely ceased, right? So I was alone, second shift, sitting in a room, just basically watching jobs run and doing homework. And that combined with the fact that I was never really all that enthusiastic about school to begin with, that's just me. It was my personality. I was that way in first grade. So the first time in my life I had the opportunity to not go. And so I took that opportunity and reversed course and went back on days. I did some classes at night centered around technology for a little while, but it just never manufactured itself in a pursuit of a degree. And within 5 years, so my friends that had gone away to college came back. They had a little bit of debt, no experience, trying to get a job. I had 5 years of experience in the tech industry, was already sought after. And so there was just really no looking back. I don't know if I'd recommend that approach to everybody, but it certainly worked well for me.
No, that's great. I've actually told all my kids that they should not go to college and should go start businesses. And I said, I will take the money that I would put into your college and I'll just invest, I'll co-invest, and we'll get a couple simple businesses off the ground. And, maybe they'll fail 5 or 6 or 7 times in 5 years. None of them have taken me up on it yet, on the offer. They're like, oh, Dad, whatever, but I think there is some wisdom in kind of like non-traditional paths as far as what growth opportunities it gives people, for sure. You basically got a business degree, in the time it would take, and then you actually came out with practical and useful for a business after 5 years, when everybody else just sort of just. I'm by the way, I'll say this in the introduction, but I'm at Penn State. I'm actually in I'm in a mansion that it's actually my old fraternity house, but they don't use it as a fraternity anymore. They use it as a really a bed and breakfast for alumni. And it's like a stunning, 20,000, square foot mansion. But I had interviews yesterday with the career counselors at Penn State, and because I'm recruiting for my company here, but it's quite interesting what the state of how we grow college students moving forward, because it's not clear for the universities. It's not clear how to engage these kids so they actually come out really useful for the kind of modern workplace. So it's a really interesting conversation. So where did you develop your interest in investing? I know we covered a little bit about sort of how you got started in the business, but is that investing something that's part of your DNA, like grandfather, father, or is it just something you picked up on your own?
No, something I picked up on my own. So sort of a roundabout story, but a couple of jobs into my career, I happened to work for a 50-person venture capital company in Boston. I was running their IT organization for them, and just got exposure to this idea that, so this goes back to the early 90s, and became aware that there's sort of two streams of technology professionals in the world, right? There's the folks that maintain technology environments for enterprise or existing businesses, which is what I was doing up to that point and what I was doing for them. And then there's folks that work in the actual tech industry. And it's two very different worlds, even though the technology tends to be similar, or at least back then it was. So the realization that you could go work for a technology business and be the focus of the company, be the product itself versus the back office necessary expenditure, and that came with not only a little more excitement around the idea that you're building an actual product, but also with the concept of earning equity as you work there, and that could be beneficial to you down the road if the business succeeded. That was a real sort of aha moment for me. And while I worked at this venture capital company, watching essentially everyone other than me and 2 other people that were doing all these deals with different types of businesses, some tech, some biotech, some healthcare, financial services, it sort of just opened my eyes to this world that at the time, I don't think a lot of people had very much, not only not exposure to, but even knowledge that it existed, right? This is pre-internet, so you couldn't just Google stuff. You had to just kind of know things.
Plus East Coast versus West Coast.
Yeah, that's exactly right. And so I became convinced that I needed to get into this other funnel, right? I was in this one funnel and I was doing okay. And it was great having grown up, in the city and now working for these companies and learning all these technical skills that I hadn't even been to a class for. I was pretty happy with the way things were going, but the realization that there was this other stream
Mm.
that was dramatically more beneficial um, really just captivated me. And so I set out to go find a startup to work for, and was kind of willing to do whatever within the realm of that business from a technology standpoint that would be helpful, so that I could kind of learn that side of the world. And it took me a couple of times to get it right, because I had no idea what I was doing. There was no playbook. There was no one to talk to. There was nothing you could look up online. I didn't know how to negotiate, compensation packages. I didn't know how equity worked. And so whatever anyone told me, I just sort of believed. But a couple rounds into, talking to different companies and getting to know some people that were in that side of the industry, it took a couple years, but I started to figure out like how this all worked and what the things were to look for. Probably the biggest mistake that people make when they first get into that kind of a world is they get so enamored with somebody's idea. And so, there's lots of entrepreneurs that have really cool ideas. There's very few of them that can turn that idea into a functioning, burgeoning business. And these days, that's even more cloudy because it's so easy to get venture capital. But back then, it was hard to get venture capital. So you just sort of assumed that if somebody got funded, that the company was going to do well. And that wasn't the case at all. Like 90% of them don't make it, even though they might.
Well, the funny thing is they celebrate getting the money, and it's like, hold on here.
Yeah.
They celebrate the raising. You even see it on people's bios. They celebrate raising the funding. It's like, holy mackerel. It's like, have you ever operated and run a profitable business? Like, is the intention here like, are we betting on the idea, or are we actually betting on a growing business? And having run money businesses profitably for 20 years, there's a very big difference between the two. So I hear what you're saying.
Yeah, it's a tremendous difference. And, the only way to sort of figure that out, at least back then, was to go through some of it. And so what I became sort of convinced of, and I hold this to this day, is that you bet on the entrepreneurs themselves and not the ideas, right? There's enough examples of folks that have started businesses that were set out to do one thing, and then they do something else. Maybe it's an ancillary benefit to the original idea, or maybe it's a realization that there's an opportunity somewhere else, and they quote unquote pivot, right? And the business becomes something completely different and then becomes wildly successful. And so what you realize is it's really about the people, how smart they are, how determined they are, how realistic they are in attracting the right folks to partner with them in the initial phases of the startup, and then how they grow it. And people have track records, right? And so finding the next Mark Zuckerberg, who's a 19-year-old genius who starts one of the biggest businesses in the world, the chances of that are almost zero, right? And so I try to be more on the side of something that has already kind of proven itself in the marketplace, has brand recognition. The idea seems at that stage kind of obvious that there's a big market opportunity there. And that's been pretty successful for me.
You try to find a sector that it is reasonably successful, and that this idea might be a permutation difference from the but something that is successful. And then is that a primary factor, or are you also so that gives market viability and potentially product viability? But what about the individual? Like, do you look for 5 years of successes, 10 years of successes, like any success, like, or is it just not really? It's not really scientific.
It's definitely not scientific. At least my approach to it isn't. I think I would say it's guided by somewhat of a band of common sense, and then somewhat of, can you visualize this thing that they're doing becoming extremely popular in either a segment or, in the consumer space. I originally started off focused on infrastructure companies because that's my background, right? Technology infrastructure. I could easily understand those products. I could sort of see this will either become a mainstream adopted technology or this is a specialized thing. And you could not in an analyst kind of way, but you could pretty quickly get to a point where you think, well, this thing has some real traction and the market share opportunity is huge, or it's going to be something that might be popular for 3 or 4 years and then it'll get supplanted. But what I found, so I started investing in 2012 officially, and what I found was over the last 5 years, everything has become a technology startup, right? Even existing businesses, in a way, are kind of becoming technology startups within themselves. And so I no longer just pigeonhole myself into infrastructure. I've done a lot of consumer type stuff, like Lyft, for example, or DraftKings. Those aren't infrastructure technologies per se, but there's an infrastructure component to them.
Yeah. Yep.
Where they're building a different way to do something that's already been done. And so the number one thing that I kind of look for these days is, does it seem obvious? The thing they're doing, does it seem obvious that that's the new way to do it? Whether or not they win the market or someone else does. So a great example I like to use, I invested in DocuSign in 2014. And at the time, the vast majority of things were still being signed or authenticated, if you will, with a pen.
Right.
And it just seemed insane to me that like people put a piece of paper in front of you and you scribble some ink on it, and then it's officially legally binding. I could sign something with my left hand and in 6 years argue that's not my signature. So then there's notaries, there's all these processes they build around trying to solidify the physical signature, right? And so it just seemed very obvious to me that at some point in time, probably sooner than later, this will all be electronic. Right. And electronic will have a lot more security around it. And so now you have this company that's not only built a mechanism to do it, but they've built a UI that's really simple to use, both from a signature standpoint and setting it up standpoint. They built all of the core backend complexity for integrations to things like document management systems and some of the security components. It just seemed like, all right, they also have a brand recognition that's similar to like Kleenex, right? When someone needs a tissue, they say, give me a Kleenex. When somebody electronically signs something, they say they're going to DocuSign it, even if they're using a competitor's product.
Right.
So it just seemed to me like, well, the upside of this is probably 99% of where they are today. It's only going to grow. You have no crystal ball. You don't know if they're going to guide the business properly, but they had at least proven that they could scale it to the point that they were at. They'd raised multiple rounds from some pretty well-known VCs. It just seemed like kind of common sense to me that this thing was going to make it. And so I try to apply that to, or a version of that, to the other things that I invest in. And it's not always that clear. That one was kind of really easy, but I think there's some pretty good clues out there for companies that are in the sort of mid stage.
So you're aware of the innovation trends, and so you're just taking right now a kind of a broader look, where it used to be more infrastructure related, where it was in your domain. Now you can pick up on something like a DocuSign, but there is some practical use within that you were using within the industry. It's just that you're just have a wider view. How do you get involved? Like, do you have to patiently wait to get into the community of, so that you can get established as an angel investor or as a fund? Like, did you have to work your way into the community so you can get out ahead of the public offerings?
You do. So there's basically three tracks, if you will, that I use for investing. There's what are called private market exchanges. And so these things have become a lot more popular the last couple of years. When I started to do them, or when I started getting involved with them, I don't think I knew anybody. I couldn't find anyone that had heard of this stuff, right? And so these are exchanges that aggregate people that are in startups, either as investors or founders or employees that have vested options and want liquidity.
Okay.
And there were a couple of companies that recognized that there was an opportunity to match make those folks with investors. And they'll work on how much actual how many options can we actually offer, what's the sort of uptake from an investment standpoint, what would people be willing to pay. It was sort of a very murky
Yeah.
ecosystem when it started out, and it's a lot more refined today. But I looked at it as an opportunity to be able to stay in the tech startup world for myself personally. When I took a job as a CIO of a law firm, I was excited to go to the law firm for a whole variety of reasons. But one thing I knew I wouldn't get was cutting edge tech, which I had been very used to. And I did that as a lifestyle choice. So I had a son, and I was in an ad tech startup, and all I did was work.
Right.
And I decided I wanted more balance and time to be able to spend with him. And so, long story short, I ended up at a law firm as a CIO, but I wanted to keep my sort of foot in the door in the startup world, but I didn't quite know how. And it ended up being that I could invest in some of these companies, and that was exciting and fun. And it forced me to sort of stay in the ebbs and flows of everything that was going on at a very different angle than I'd done before.
It's interesting as you talk about this, and I'll let you continue. You mentioned about the two streams earlier, and I think this is like really important for everybody listening. It's like you had the CIO stream, which a classic position. And then you have really, I would say, almost like a CTO track where you're being a little bit savvier about the CTO because you already know that you can do the CIO, but you're saying, no, I'm going to be on the product. I'm going to be on the customer facing side and helping the business essentially with this digital product, whatever it may be, SaaS or whatever technology is being made, but more as the CTO with negotiating a essentially no different than the senior team would, or negotiating options or whatever your pay plan would look like to participate beyond your salary in the business doing extraordinarily well, whether it's a public offering or bought by a strategic investors that you would have the opportunity to win. So it seems like there was two tracks there, and then you moved. Now you're in a classic CIO role, but you're like, okay, I can't do the CTO stuff because there's no real. I'm sure there are startup law firms that are trying to disrupt the industry, but that would be sort of like the ad thing you were just at, the ad company. So you moved into the private exchange, which allows you to essentially, I guess, you're investing, you're exiting, you're helping some of the early founding employees exit or stay, and they just want some liquidity, and then you're taking a piece of the company beyond the initial startup. Is that correct?
Yeah, that's exactly right. And I do think I have a little bit of an advantage in the sense that because I'm working in the industry, I get exposed to a lot of products and services from a consumption standpoint that, if you're a traditional VC, the VCs do a lot of due diligence on companies, but they look at things a lot of times through different lenses than I would per se. And so it's a lot harder to be successful, I think, in the earlier stages of this stuff. You can do all the homework in the world. At the end of the day, you just don't know how things are going to turn out, which is why you see such a massive percentage of failure in a typical VC fund, right? 85 to 90% of the investments return zero or, go out of business. It's the ones that make it that make the fund successful. In fact, they pay for all the failures and 10 times over. So the VCs don't mind that. The investors don't mind that because they make a whole bunch of money, and the entrepreneurs get funded and get to pursue their dreams. So it's a system that works, but it is interesting that it's a system that works despite the fact that there's a 90% failure rate. And so I think if you move downstream a little bit to mid stage and you take a little bit different track, you can do this stuff and be successful without investing the insane amount of hours that a traditional VC has to invest.
No, that's great. I love how you broke that down. And I was just looking at my notes because when you were talking about the private market exchange, I was curious if you've started to counsel or if the teams are starting to counsel some of your companies to look at SPACs at all as a kind of a not a traditional approach to going public, but another option. Has anybody looking into that within your portfolio that you've been exposed to?
So I've had a couple of companies that I invested in debut publicly through SPACs, right? So that's definitely worked its way into the ecosystem. I haven't personally invested in SPACs. I know some people that have. I don't know that it'll be interesting to see if they're a long-term vehicle that survives the scrutiny of compliance and regulation. I have a sense that at the very least they're going to be changed. I don't know that they're going to be around. There's a big part of me that thinks that a lot of the stuff that's going on in the startup ecosystem is an end result of just a runaround of compliance and regulation that's gotten to be so overburdensome. Entrepreneurs don't want their companies to go public because they don't want to deal with what they have to go through an IPO. So some people came along, right? When there's a problem, people innovate. People came along, they innovated SPACs. SPACs have always been around, but they were never used like this. And so now they're this mechanism where the entrepreneur, the founder, doesn't have to deal with the Wall Street process. And so they get involved in a SPAC and people sort of take care of it. It's like an IPO service, if you will. And so we'll see how long that continues. There's definitely, I think, some perceived consumer risk that's being just negated with the desire to take companies public as quickly as possible without going through all the red tape.
Did maybe just, can you give for our listeners just what is a SPAC, just a kind of the Reader's Digest version of a SPAC and how it's different than like going public on NASDAQ or the New York Stock Exchange?
Yeah, so basically a SPAC is a special all-purpose collection of equity investors, and sometimes it's an existing company that has holdings in other companies, and sometimes it's put together specifically to go acquire one existing organization. So they kind of run the gamut there, but they're designed to you consume a company through an acquisition, and then that SPAC is set up to essentially go public and be publicly traded. And sometimes it's already publicly traded, and sometimes they do it after they acquire the targets. But it makes it as if you're being acquired from a public company. So like if you had like Microsoft buy your company and there'd be a stock conversion, right? You then in theory are traded under the Microsoft ticker. It's similar to that, only the SPAC nobody's likely heard of prior. So my understanding is they were around originally for private equity investors to put together a portfolio of the companies that they thought would make up a specific targeted market that might come in pieces. So you might have three companies that are doing three different things, but overall they're, say, a security play or they're a whatever play. And so you go acquire them and you try to build a comprehensive market competitive brand based on putting those things together. That's kind of how they were used prior.
Right.
I don't know exactly when the light bulb went on that you could use that mechanism to sort of circumvent the roadshow and S1 and all that stuff, but that seems to have happened 5 or 6 years ago, and it got real popular last year.
Yeah, for sure. Well, I think it's interesting, typical innovation. And I mean, there's no doubt about it. The hotel industry wishes they could get out of wishes they had gotten together to form a consortium before Airbnb was invented. There's no doubt that the cab industry wishes they got out ahead of Lyft and Uber, but they didn't. And people want a solution, and they go around the edges. And there's no doubt that the FAA wishes they got out ahead of the drone industry, because they would have slapped regulations on it a long time ago. But these apps and these technologies are so darn quick that they outstrip our ability to regulate. And look at Bitcoin and blockchain. More importantly, blockchain. I mean, I think the only thing in the way of blockchain is going to be governments.
Yeah, I agree. So Steve Case, the founder of AOL, wrote a book a few years ago called The Third Wave. And in that, the book is entirely about what you just mentioned. It's that there's the next iteration of innovation is going to be technologies that bump up against compliance and regulation. And you're going to see, and we see this today, right? You're going to see a queuing of life improving technologies that cannot, reach its full potential because it bumps up against, is this an acceptable thing to do? I think drones can be very cool, and there's a lot of ways to use them that to be beneficial. But at the same time, do you really want, hundreds of thousands of these things buzzing overhead everywhere you go? I don't think so. But the technology is already there, right? It's not like this has to be invented. My favorite example of this is, so if you study the autonomous transportation space, there's about 30 companies that have been pouring billions of dollars for the last 5 to 7 years into essentially flying cars, right? We call them flying cars because we grew up watching the Jetsons.
Yeah, right.
But these are essentially drones that transport human beings. And they've got this vertical takeoff and landing capability, so you don't need any runways. They're run on batteries, so no petroleum. They're quieter than a library, so they don't make noise overhead, and they exist. This isn't like we're hoping in 5 to 10 years we'll be able to do some of this stuff. They already exist. They're just not legal. So you can't fly one of these things over Boston or New York or wherever. So they do other test flights in the middle of nowhere. That's something that could transform people's commutes, people's personal lives, cities. It could be tremendously beneficial for the environment. Imagine if you never have to go to the airport again. That wouldn't be a bad thing. But the government's not anywhere near there, right? So now the regulation and compliance and all that stuff has to catch up. And that's going to slow down. It'll be interesting. So that's going to slow down a lot of technologies. And Bitcoin's a real good example of what happens when one gets out in front of compliance. It's just sort of everywhere, and people are doing it. And there's financial services organizations that are just all in on it. And I don't think governments know what to do.
No, they don't. And the flying cars is interesting. I'm a part of the, you probably, do you know Abundance 360 or A360?
I'm aware of them, yeah.
Yeah, so I go to their conferences every year. It's put on by Peter Diamandis, who also founded Singularity University, which focuses on, which I've been to their executive program, which is really exponential technology trends focused. And so A360 is more the investor side and those trends and where to take advantage of them. And I had one of the actually the leading flying car guy in the world on my podcast. And, it is quite stunning to see, how far we are right now. And we're literally, just a few FAA strokes away. We can already deliver packages that are 100 and 300 pounds. They already have it. So if one of the rotors dies, it still keeps afloat. And I was, back in 2010, when I had my first little drone, it was hard to keep that thing in the air because it didn't have the geospatial awareness. It didn't have it didn't know where it was. You had to know where it was, but you could barely see it. And so those things are all solved now. So it's quite fascinating. And you're right. What is going to get in the way of that happening? Because and then I asked, and I did this in my innovation talk with our CIO group last month. Why is there a trend for this? Because there's a stunning percentage of people on the planet, like it's over 50%, that have never flown in a plane.
Right.
Like never. Like we think in the Western world, everybody's flown, but they haven't. So the market potential is just so massive to just move people about. And I didn't realize that until I'd heard him talk about it.
Yeah, it's pretty staggering. Similar stat I heard last year. I actually saw data on this, that 40% of the world's population is not on the internet. And that doesn't mean they don't have broadband and they're not on the internet all the time. They literally have never been on the internet.
Right.
40%. That's crazy. So there's this thing that I used to tell people about. So South Korea was the last industrialized country to run fiber optics in their country. So they were like the last to get on the internet for the industrialized nations. And the end result of that is when they went and did it, the technology had improved so much that they now have the fastest internet connections in people's homes in the world by far. So because they waited, they got the best connectivity. And I think that model will be interesting to see how it plays out in these places that, people have never flown, or people aren't on the internet, or people don't have banks. They can suddenly go from that, like 100 years behind the rest of the world, to ahead of everybody, because their adoption rate will be not getting rid of the old thing and not having to deal with red tape, but going right to the modern setup. And so I think this stuff will be interesting. I've heard very smart people say the biggest barrier for the United States to be competitive in the next 100 years is going to be our will to adopt new things. And so, like, when I think about flying cars, like, you can see China adopting that,
Yeah.
and just saying, we're going to do this. And you can see the United States like arguing about it for 30 years.
Yeah, I mean, I think we're back to the politics and government. I think Chinese have a real advantage in the sense that they're not encumbered with political correctness. They don't have because they have their politics as a top-down authoritarian government. So they just have to decide where to go, and they can go, and then they're not concerned about ethics. They're not concerned about, but neither were we in the 1800s in the gold mining and putting the trains, across the United States. This was the wild, wild west, and we were perfectly comfortable with tackling the wild west. And I think that's the advantage China has right now, is I think they're much more comfortable with some of the really what we would consider tough decisions. I think they're just charging forward.
Yeah, I totally agree. So hopefully we can get our act together a little bit when it comes to adoption of some of this stuff, because there's some pretty exciting things happening.
So where do you think the role of the CIO, like when people look at you and ask you questions about your role as a business IT leader, you're in a legal field, which is ripe for disruption as well. Like to me, your brain and your ability to see trends would be quite useful for your firm and your industry. How much responsibility do you feel for that? But it's also notoriously not a quick moving field. So how do you navigate that? It's like quicksand for you, I'm sure.
Yeah, no, it's definitely going to be a challenge over the next 5 to 7 years. So I've been recently trying to get folks focused at the firm on the fact that in the last couple of years, there's been a massive infusion of venture capital chasing legal tech disruption. And so much so that we've actually charted this. And if you go back 2 years ago, there was about $100 million per year going into legal tech innovation, about 2018-ish, right? And now there's like $4.5 billion per quarter. And so that's a pretty good sign that things are going to change, right? And you can't, it's very hard to bet on like what's going to win out and what isn't. But it's almost guaranteed that the way it's done now will not be done this way in, call it 5, 7, 10 years, whatever the trajectory is. And so, a CIO's role traditionally in a law firm was to put together the technical Legos to make people efficient and allow them to do their jobs, which is essentially, creating documents and moving those documents around and billing systems. And there's been some application to some machine learning, et cetera, for some of the larger firms to try to streamline some of the repetitive processes that lower level lawyers would typically handle. And some of that's gone well and some of it hasn't. But I think in the next, decade, the CIO's role is going to be to help protect the business, if you will. You're not going to be able to just sort of run business as usual in a law firm with all of this innovation coming in, because the dirty little secret about the innovators that are coming into the legal industry is a lot of them have no intention of taking the technology that they develop and licensing it to law firms. They want to build platforms that will allow them to take some of the clients away from law firms and build processes that facilitate legal, legal happenings within the platform itself. So in some cases, you may need partnerships with law firms, but in a lot of cases, you just want to facilitate that legal process and sort of cut out the firm altogether. And so again, it's impossible to know at this stage which one of these are going to be successful and which ones aren't. But there's so many of them going on that sort of like when the internet got going, right? You think about like the .com era, there were thousands of companies that started and went out of business. And people always think of the .com era as a failure. Well, Amazon and Google and some other companies came out of that as well, right? And so the world completely changed. The ones that won big. And I think there'll be, there'll be some bumpy road ahead for the legal industry trying to navigate all this stuff. I don't think there's here's the answer, here's what you need to do exactly. I don't think that's out there. I don't think that's going to be out there. But to me, it's about engagement and awareness and being smart and not having your head down. And, I tell the folks at Goulston Storrs, the ones that will engage in this conversation with me about this right now is, Amazon displaced every retailer in the United States. They didn't do it overnight. It took them 25 years. And so there's this perception that Amazon just showed up and everybody wanted to shop online. And so Sears and Kmart and JCPenney and Bed Bath & Beyond and all these companies that Chapter 11 and closed all their stores, like just couldn't have seen this coming. And it couldn't be further from the truth, right? Like Amazon's opened their first store in the mid 90s. And they built this e-commerce fulfillment model over decades. And these other places were building new stores, their revenue was up, their stock was up, their executive suite were being rewarded for doing a great job growing the companies. But they thought of themselves as this experience, and e-commerce was not part of that. So they just completely missed what was coming. And by the time they realized that Amazon was a direct competitor, it was too late. They had the fulfillment model and the scale, and these other companies couldn't compete. So you've seen versions of that in other verticals, right? And so what I think part of my job is now is to make sure that that doesn't happen to the law firm that I work for. And so I can't tell them this is exactly how you need to approach all this innovation, but I can tell them that you need to pay attention to it because there's going to be moments of clarity. There's going to be opportunities that are going to, I think, be obvious, but you have to be watching the stuff in order to see that.
So the quiet phase that we're in right now is a precursor to a disruptive phase. So I think what you're saying is you see these trends, they're not obvious, but they're also are obvious to people. And so you're paying attention to where this could potentially play out versus being surprised later on.
Yeah, exactly. And I think there's some obvious potentials, right? We think about, okay, we're going to do this thing for a client and the value is in the knowledge and the ability to get the end result. But the billings for that end result are mostly around minutia of work.
Right.
The minutia is probably going to get a lot more efficient over time. And so some of it to me seems like, at least at a philosophical level, like obvious, but you just don't know how the Legos are going to get arranged over time. And so you got to be on the lookout for that.
Now, why can't you use your influence and your knowledge and go to the top 5 law firms in Boston or the top 5 in the East Coast or across the country and put together a fund that is meant to test these technologies for the specific purpose of ushering them in and becoming a predominant investor in them, so that if there's a platform built, now there is a licensing because you have a board seat on this and you can take some bets on some of these companies so that as they're going north, not only are you guys learning, but you're partnered with them so that no matter what morphs out of it, you can win and you can influence what happens.
Yeah, so there's actually a organization called the Legal Tech Fund that I sit on the advisory board for that started a couple of years ago, and they're focused entirely on this space. and recently convinced the folks at Goulston to partner with these guys, not as investors, but from a research and advisory standpoint. But there are other people in the industry and other firms that are investing in the fund itself. And so I think there'll be more of that as time goes on.
Sure.
But yeah, we are definitely in the early stages of it. And, like you mentioned, law firms are traditionally very slow moving, conservative, and it makes sense if you think about it, right? They've been doing the things that they've been doing for a long time. They're very, very successful at it. Most firms in the AM law have to turn work away because they're usually too busy. And so they've been handsomely rewarded for doing what they do. They're obviously the best in the world at it. So getting folks to kind of change direction or even think about change direction it's a conversation that has to happen over a long period of time.
Yeah, and that makes sense. Well, I really, I think we can go down endless conversation routes here, and I think but I think just from a time's sake, I think we should really bring it to a closure where I'd really like to see kind of what you think the modern CIO, like if you could look back on your career 10 years in the past, and you could be in that brain and that person 10 years ago and had the wisdom you have today, what would you tell the kind of the modern IT leader, the modern CIO, the modern top person that's influencing technology decisions? What would you say to that person?
Yeah, so I think two things come to mind. One of which is look outside your own industry for what's going to happen. I think CIOs become very pigeonholed into their own marketplace, and they all talk to each other and they try to see trends there. And you do need to do that. That's very important. But you also need to look outside to other industries that maybe perhaps are more innovative or for whatever reason got disrupted or changed. There's clues there as to what's going to happen. And you're a curator of change in your organization. And so that shouldn't just be confined to the software that people use every day. It should be expanded to what does this stuff mean for our clients or customers? Where's the industry going to be headed? And I think that's a big part of a CIO's job today. The other thing that comes to mind is for the folks that haven't done it, and different industries have different uptake to this stuff, but get your stuff into the cloud, get out of the business of maintaining traditional IT stuff across the board, get to 100%. You'll be more secure, but more importantly, you can redeploy your resources to really help the business instead of maintaining the infrastructure and the application code and all the things that IT has traditionally done the last 25 years. It's really, 10 years ago, you couldn't do that. 10 years ago, that opportunity didn't exist. Today it does. You should take full advantage of that, because at the end of the day, if you're bogged down doing those things, you won't be doing the future stuff.
Mm. A lot of people listening didn't know that, most people on the planet hadn't flown hadn't flown in a plane before. Most people listening to this think that everybody's moved to the cloud, and it's just 100% false. Like there's huge pockets of people that are still dipping their toes in the cloud. So that is but you can't participate in the future if you got a foot stuck in the past. And that's what you're saying. It's essentially what you're saying. You can't be innovative if you're managing the legacy decisions.
Yeah, that's exactly right. It takes all your time, and will disrupt, anything that you're trying to do with just trying to keep the lights on.
Yeah.
I heard recently, I think it was Gartner. I don't want to misquote whoever came up with this, but they analyzed workloads, IT workloads across the planet, and 90% of them are still in on-prem data centers.
Yep.
And that just blew me away. 90%.
I know, that's stunning. You got to send me that quote. We're going to put that in the show notes if you can find it. So just as we final here. By the way, I love that curator of change quote. I think that's a really good one for people to kind of, that kind of rung with me. Where can they learn about you? I'm obviously have LinkedIn up, and I can see your fund information. You put a lot of stuff on LinkedIn for consumption. But where would you prefer people to learn more about you and what you're doing, and reach out and connect if they want?
Yeah, I think LinkedIn's the place. LinkedIn's the only social media site that I'm on personally. And so everything's there. You can contact me, you can read about the stuff that I do, both in the legal industry and the VC world. And my articles are up there as well.
Well, we've never had a CIO investor on before, and someone has also firmly got their feet in the CIO and the CT and that CTO world. But I think you gave a lot of illumined a lot of people's, I know, my thinking on what a mindset that you need, and gave people a view into what's possible. So I really appreciate you for your time here today, John.
Yeah, this was fun. Thanks, Bill. It's good talking to you.
Until next time, and have a great day.
All right, you too. Take care.